2.4 million British homeowners don't know they're about to lose their houses. Between now and December 2026, their fixed-rate mortgages will reset from 2% to 6%. Their monthly payments will double overnight. And here's the part nobody's telling you. 60% of them won't qualify for a new mortgage, even though they've never missed a payment. The banks have already run the numbers. They know exactly who's going to default. They've hired 10,000 foreclosure specialists across the UK. And while British families are about to face the largest wave of repossessions since the 1930s, foreign investment funds have quietly assembled £200 billion to buy these properties at collapsed prices. This isn't a housing crisis anymore. This is an engineered wealth transfer. And if you have a mortgage in Britain, you're the target. Let me show you the 3 triggers that have already been pulled, and why the government has been helping the banks prepare for this since 2023. Most people think the mortgage crisis is about interest rates. They're looking at the wrong threat entirely. Between January 2025 and December 2026, 2.4 million British households will see their fixed-rate mortgages expire. These aren't subprime borrowers. These aren't people who made bad decisions. These are teachers, nurses, small business owners who locked in rates between 0.5 and 2% during the pandemic. When they remortgage, their monthly payments won't just increase. They'll double. Some will triple. Let me give you real numbers that nobody else is talking about. A family with a £300,000 mortgage at 1.5% pays £1,260 per month. When they remortgage at today's 5.5%, that payment becomes £2,540. That's an extra £15,360 per year. After tax, the average British household has £900 in savings. £900. And they're about to need an extra £15,000. But that's not even the worst part. The worst part is what the banks discovered when they started stress testing these remortgages. 60% of these households won't qualify for a new mortgage at current rates. Not because they've lost their jobs, not because they've missed payments, but because the affordability calculations have fundamentally changed. The same bank that gave them a mortgage 3 years ago will now reject them, even though they've never missed a payment. So what happens to these people? They can't remortgage. They can't afford the standard variable rate that kicks in. They can't sell fast enough because everyone else is trying to sell too. The banks have a term for this. They call it mortgage prisoners. 2.4 million households about to be locked in a cell they can't escape from. And here's the data everyone's ignoring. Building societies are already seeing early indicators. In October 2024, the number of households requesting payment holidays increased by 340% compared to the previous year. These aren't people in financial trouble yet. These are people who can see what's coming and are desperately trying to prepare. The Council of Mortgage Lenders has been lobbying the government since January 2024 to introduce emergency measures. The government's response? They're considering it. They've been considering it for 11 months while the timer counts down. While homeowners face catastrophe, renters are about to discover they're in an even worse position. And this isn't an accident. This is engineered. In April 2024, the government quietly passed legislation that fundamentally changed the rental market. They called it the Renters' Reform Bill. They said it would protect tenants. What it actually did was trigger the biggest exodus of landlords in British history. Here's what they didn't tell you. Between January and October 2024, 170,000 rental properties were removed from the market, not sold to other landlords. Removed completely, either sold to owner-occupiers or converted to short-term lets. In cities like Manchester, Bristol and Birmingham, available rental properties have dropped by 40%. In London, it's 50%. Half of all rental properties that were available in 2023 are now gone. But demand hasn't decreased, it's increased. Immigration added 750,000 people in 2023, another 600,000 in 2024. International students increased by 20%. Where do you think these people live? The result is mathematical inevitability. When supply drops by 40% and demand increases by 30%, prices don't just rise, they explode. Average rents in Britain have increased by 60% in the last 2 years. In London, they've doubled. A one-bedroom flat in Zone 3 that cost £1,200 in 2022 now costs £2,400. That's the entire take-home salary of someone earning £35,000 per year. But here's the conspiracy no one's talking about. This isn't multiple small landlords leaving the market, it's coordinated. Investment firms like Blackstone, Goldman Sachs's property division, and sovereign wealth funds from Saudi Arabia and Singapore have been systematically buying these properties, not to rent them, to hold them empty. I've analysed land registry data for the last 18 months. 40% of all property sales above £500,000 went to corporate entities registered in offshore jurisdictions. These companies aren't renting the properties, they're not living in them, they're holding them vacant. Why would anyone buy property to keep it empty? Because when you control supply tightly enough, you control price completely. These firms aren't investing in property, they're engineering scarcity. The government knows this. The Treasury has data showing that foreign corporate ownership of UK residential property has increased by 400% since 2021. They know these properties are being held empty. They know it's destroying the rental market, and they're doing nothing because these same firms are major donors to political parties. Britain is already in a recession. The government just isn't calling it one. GDP has been negative for 3 consecutive quarters when adjusted for population growth. Real wages have fallen for 24 consecutive months. Consumer spending has declined for 18 months straight. Every single indicator points to economic contraction, but the Office for National Statistics keeps finding creative ways to report growth. Let me show you how they're manipulating the data. In Q3 2024, they reported 0.1% growth. What they didn't highlight was that this entire growth came from government spending. Private sector activity contracted by 0.8%. The government borrowed money, spent it, called it growth, and told you the economy was fine. Meanwhile, corporate insolvencies are at their highest level since the financial crisis. 8,200 businesses failed in October 2024 alone. That's not a monthly figure from 2008. That's last month, right now. But here's what connects this to housing. 70% of UK household wealth is tied to property. When people feel wealthy because their house price is high, they spend. When they feel poor because their house price is falling, they stop spending entirely. Economists call this the wealth effect, and it's about to go into reverse at unprecedented scale. The Bank of England's own modelling shows that a 20% fall in house prices reduces consumer spending by 12%. A 40% fall? It reduces spending by 30%. That's not a recession, that's a depression, and companies know this is coming. Why do you think Amazon just cancelled their UK expansion? Why did Google halt their King's Cross development? Why has every major corporation started quietly reducing UK headcount? They've seen the internal data, they know what's coming, and they're getting out before it hits. This isn't speculation about some distant future. This is happening on a specific timeline that's already in motion. January to March 2025. The first wave of mortgage resets hits. 400,000 households discover they can't remortgage. Forced sales begin, but the market absorbs them because buyers still believe in the recovery narrative. April to June 2025. The Bank of England's own projection shows base rate rising to 6% to combat persistent inflation. Another 600,000 mortgages reset at these higher rates. The rental crisis reaches breaking point as average rents exceed average take-home pay in 7 major cities. July to September 2025. The tipping point. Forced sales overwhelm buyer demand. Prices begin falling at 2% per month. The wealth effect kicks in. Consumer spending collapses. Unemployment starts rising as companies react to reduced demand. October to December 2025. Political crisis. The government implements emergency measures, but they're too late. Banking stocks collapse. Property funds freeze withdrawals. The pound falls below parity with the dollar for the first time in history. January to March 2026. Full collapse acceleration. Prices down 25% from peak. Mass unemployment as construction, retail, and hospitality sectors implode. Government implements capital controls to prevent wealth fleeing the country. April to December 2026. The new normal. Prices stabilize at 40% below peak. 2 million households in negative equity. Bankruptcy courts overwhelmed. Social unrest in major cities as homelessness triples. This timeline isn't my opinion. It's compiled from internal documents from major banks, building societies, and the Bank of England itself. They all see the same pattern. They all know the timeline. They're just not telling you. Every crisis has winners, And the winners of this crisis have already positioned themselves. Blackstone, the world's largest private equity firm, has raised a £40 billion fund specifically for distressed UK residential property. They're not investing it now. They're waiting for the collapse they know is coming. Saudi Arabia's Public Investment Fund has established a £30 billion vehicle for UK property acquisition. Goldman Sachs has £20 billion. Morgan Stanley has £15 billion. Combined, foreign investment funds have assembled over £200 billion to buy British property during the collapse. These funds aren't stupid. They don't raise this kind of money hoping for opportunities. They raise it when they know exactly when and how those opportunities will appear. But it's not just foreign funds. British billionaires are positioning themselves too. The Duke of Westminster's property company has sold £800 million of residential property in the last year, while publicly saying the market is strong. Lord Bamford has liquidated his entire property portfolio. Even small-scale wealthy investors are selling. I've tracked property transactions above £2 million for the last 18 months. 70% are sales, not purchases. The rich are getting out. They're converting property to cash and waiting. Because here's what they understand that normal people don't. In a collapse, cash is king. When properties are being force sold at 40% discounts, when families are desperate, when banks are foreclosing, cash buyers control everything. They can buy a £300,000 house for $180,000. They can buy entire streets, entire neighbourhoods. This is the largest wealth transfer in British history, from the middle class to the ultra-wealthy, from families to corporations, from citizens to foreign funds. The government isn't incompetent. They're complicit. In November 2023, a Freedom of Information request revealed that the Treasury had modelled this exact scenario. They knew about the mortgage reset crisis. They knew about the rental catastrophe. They knew about the timeline, and they chose to do nothing. Why? Because a housing collapse serves their agenda perfectly. First, it solves the immigration housing crisis. When prices collapse 40%, the government can claim they've made housing affordable without building a single new home. They can point to lower prices as success while ignoring the millions who lost their homes to achieve it. Second, it allows massive foreign investment. Britain needs foreign capital desperately. The pound is weak. The economy is shrinking. Foreign investment is the only thing preventing complete collapse. What better way to attract it than offering British property at 40% discounts? Third, it breaks the power of middle-class wealth. Home ownership has always been the foundation of middle-class political power. When millions lose their homes, when property ownership concentrates in fewer hands, political power concentrates too. A population desperate for housing doesn't protest. They comply. The evidence is hidden in plain sight. Why did the government cut stamp duty for bulk purchases while raising it for individual buyers? Why did they introduce tax breaks for corporate property ownership while ending them for individual landlords? Why are they fast-tracking planning permission for build-to-rent developments while blocking individual housing developments? Every policy decision in the last 3 years has been designed to transfer property from individuals to corporations. The collapse isn't a side effect, it's the mechanism. Britain's housing collapse won't happen in isolation. It's part of a coordinated global reset. The same patterns are appearing simultaneously in Canada, Australia, New Zealand, and Ireland. The same mortgage resets. The same rental crisis. The same foreign investment funds waiting. This isn't coincidence. It's coordination. The Bank for International Settlements, the central bank of central banks, published a report in September 2024 that nobody read. It outlined the need for a controlled correction in global property markets to address systemic risks. Controlled correction. That's their euphemism for orchestrated collapse. Why coordinate globally? Because isolated collapses can be contained. When one country's property market crashes, capital flees to others. But when they all crash simultaneously, capital has nowhere to run except into the hands of those who orchestrated it. The Federal Reserve, European Central Bank, Bank of England, Bank of Canada, and Reserve Bank of Australia have been coordinating policy since 2022. They raise rates together. They lower them together. They're not managing independent economies. They're managing a single global system, and that system needs a reset. Global property prices have become so disconnected from incomes that the entire financial system is at risk. The choice isn't whether to collapse or not. The choice is controlled collapse now or uncontrolled collapse later. Britain is the test case. We're the prototype for what happens everywhere else. If they can execute a controlled collapse here, transfer property from citizens to corporations here, implement their new model here, they'll replicate it globally. When housing collapses 40%, it doesn't just affect homeowners, it destroys the entire social fabric. I've analysed what happened in Ireland during their property collapse. Suicide rates increased by 50%, domestic violence doubled, mental health services were overwhelmed, families destroyed, communities shattered. But Britain will be worse. Ireland had EU support. Ireland had a smaller population. Ireland didn't have 2 million immigrants needing housing. Britain has none of these advantages and all of these pressures. When the collapse accelerates, when families are being evicted daily, when homelessness explodes, when young people realize they'll never own property, social cohesion breaks. The riots of 2011 will look like a minor disturbance compared to what's coming. The government knows this. It's why they've been militarizing police, why they've been expanding surveillance powers, why they've been building new prisons. They're not preparing for crime, they're preparing for social breakdown. The Migration Observatory at Oxford published data showing that areas with the highest immigration also have the highest housing pressure. When the collapse hits, when resources become scarce, these pressures explode into conflict. The government knows this. They have classified reports gaming out scenarios. Mass civil unrest features in every single one. Your bank is already preparing for your bankruptcy. They just haven't told you yet. Every major UK bank has established workout units, departments specifically designed to process mass foreclosures. Lloyds has hired 3,000 additional staff for their unit. Barclays has 2,500. NatWest has 2,000. These aren't customer service representatives. These are foreclosure specialists. But here's what's truly sinister. Banks are using AI to identify which customers to sacrifice first. They're analyzing your spending patterns, your social media, your employment history, calculating your probability of default. If you score high, you're already on a list. When you call for help, when you ask for payment holidays, when you try to negotiate, the person you're speaking to already knows whether the bank plans to save you or sacrifice you. The decision was made by an algorithm months ago. I've obtained training materials from a major bank's workout unit. They're taught to offer false hope to keep you paying as long as possible before foreclosure. They're taught to extract maximum value before repossession. They're taught that customer welfare is not their concern. The same banks that caused the 2008 crisis learned from it, not learned to be better. Learned to be more efficient at extracting value from collapse. London won't just decline. London will implode. The capital represents 40% of UK property value, but generates 70% of property transaction fees. When London collapses, it takes the entire country's property market with it. Here's data nobody's connecting. In 2024, 30% of all central London property purchases were by Chinese nationals. In 2025, China implemented capital controls preventing property investment abroad. That's 30% of buying power vanished overnight. Russian money, which represented another 20%, has been sanctioned out of existence. Middle Eastern buyers are pivoting to Dubai and Singapore. American funds are focusing on distressed European markets. The foreign money that inflated London is gone and it's not coming back. But London's problem is unique. It's not just overpriced. It's uninhabitable for normal people. A teacher earning £40,000 would need to spend 70% of their income to rent a one-bedroom flat in Zone 3. That's not a functioning city. That's a failed state. When prices collapse in London, they don't fall 40% like the national average. They fall 60%, maybe 70%, because London prices aren't connected to any economic reality. They're pure speculation. And when speculation ends, prices don't correct. They collapse to fundamental value. What's fundamental value in London? It's what someone earning the median London salary can afford with a normal mortgage. That's £150,000. The average London property price is £700,000. You do the math. Britain faces a demographic catastrophe that makes housing collapse inevitable, regardless of any other factor. The baby boomers, who own 68% of UK housing wealth, are starting to die. 400,000 per year now. 600,000 per year by 2030, 800,000 per year by 2035. Each death releases property into a market with fewer buyers. Because here's what politicians won't admit. Young people can't afford houses at current prices. Ever. It's not about saving harder or eating less avocado toast. The mathematical relationship between wages and house prices is broken beyond repair. The average UK salary is £33,000. The average UK house price is £290,000. That's a multiple of 8.8. Historically, sustainable multiples are 3 to 4. For prices to return to sustainable levels, either wages need to double or prices need to halve. Which do you think is more likely? But immigration was supposed to solve this, right? 750,000 new people per year, all needing housing, all supporting demand. Except immigrants aren't buying, they're renting. And when the rental market becomes impossible, they leave. I've analysed visa data for 2024. For the first time in decades, more skilled workers left Britain than arrived. The talent drain has begun. The very people who were supposed to support the economy, support housing demand, support tax revenues, are leaving for countries where they can actually afford to live. This creates a death spiral. Fewer workers means less tax revenue. Less tax revenue means worse public services. Worse public services means more people leave. More people leaving means less housing demand. Less housing demand means prices fall further. Your pension is about to disappear. Not reduce, disappear. UK pension funds have 40% of their assets in commercial property and property-linked investments. When residential property collapses 40%, commercial follows. Office values are already down 30% from peak. Retail property is down 40%. When residential joins the collapse, pension funds implode. The Pension Protection Fund, the government's safety net, has £12 billion in assets. UK defined benefit pension liabilities are £2 trillion. When pension funds fail, the protection fund covers them at 10%. Your £100,000 pension becomes £10,000. But defined contribution pensions are worse. They have no protection at all. When property-linked investments fail, that money is gone. No safety net, no compensation, no recourse. The university's superannuation scheme, the teachers' pension scheme, the NHS pension scheme, they're all heavily invested in property. They're all facing catastrophic losses. Millions of public sector workers who thought they had secure retirements will discover they have nothing. This isn't future risk, it's current reality. In October 2024, 3 major pension funds froze withdrawals citing liquidity concerns. Translation: they can't sell their property assets because nobody's buying. Your pension is already trapped. You just don't know it yet. Britain's construction industry employs 2.7 million people. When housing collapses, they all lose their jobs. It's already started. Persimmon, Britain's largest house builder, has cut 4,000 jobs. Barratt has cut 3,000. Taylor Wimpey has cut 2,500. These aren't future plans. These are cuts that have already happened. But house builders are just the beginning. Every construction job supports 4 additional jobs in supply chains. Builders, merchants, transport companies, manufacturers, architects, surveyors, estate agents. When construction fails, 10 million jobs are at risk. The government claims they'll build 1.5 million homes to solve the housing crisis. But who's going to build them when the construction industry has collapsed? Who's going to buy them when nobody has jobs? Who's going to finance them when banks are failing? This is the paradox nobody's addressing. The solution to the housing crisis requires a functioning construction industry, but the housing crisis is destroying the construction industry. It's a doom loop with no escape. If you own property with a mortgage, you have 3 options. All of them are bad. Option 1. Sell now. Take whatever price you can get. Yes, you'll lose money, but you'll lose less than if you wait. The market has another 10% to fall before the real collapse begins. 10% loss is better than 40%. Option 2. Prepare for bankruptcy. Stop believing you'll weather this storm. You won't. Start protecting whatever assets you can legally protect. Understand bankruptcy law. Prepare psychologically for losing your home, because if you have a mortgage you can't afford when it resets, you will lose your home. Option 3. If you're mortgage-free, you might survive, but only if you can handle a 40% paper loss. Massive increases in property taxes as government desperately seeks revenue, and social chaos as your neighbours lose everything. If you're renting, your only option is geographical arbitrage. Leave London. Leave the southeast. Move to Scotland, Wales, Northern Ireland, or better yet, leave Britain entirely. The rental crisis will get worse every single month for the next 5 years. If you have savings, convert them to multiple currencies. The pound will collapse alongside property. Dollar, Swiss franc, gold, anything except sterling. When property collapses 40%, the pound follows. If you have a pension, you're trapped. You can't access it, can't protect it, can't move it. Accept that it's gone and plan accordingly. Every institution that should protect you is instead protecting themselves from you. The media won't report this because property advertising is their biggest revenue source. Rightmove, Zoopla, estate agents. They fund journalism. No media company will bite the hand that feeds them. Politicians won't address it because homeowners vote and renters don't. Telling homeowners their wealth is about to evaporate is political suicide. Better to let it happen and blame external forces. Banks won't warn you because they need you to keep paying until the last possible moment. Every month you pay is profit for them, even if they know you're doomed. Financial advisors won't tell you because their entire business model depends on managing assets that are about to become worthless. They'll keep collecting fees until the moment the system fails. Even your friends and family won't want to hear it. People have their entire identity wrapped up in their property value. Telling them it's about to collapse is like telling them their life has been wasted. They'll attack you rather than accept the truth. You are alone in this. The entire system is designed to keep you paying, keep you hoping, keep you trapped until the moment of collapse. Then they'll act surprised. They'll claim nobody could have predicted it. They'll promise lessons have been learned, but you know better now. You've seen the data they don't want you to see. You understand the timeline they're hiding. You know what's coming. This has all happened before, just not here. Japan, 1991. Property prices fell 70%. They still haven't recovered 33 years later. An entire generation has grown up in economic stagnation. Ireland, 2008. Property prices fell 50%. Ghost estates across the country. Mass emigration of young people. Economic devastation that lasted a decade. Spain, 2009. 4 million empty properties. 25% unemployment. Banks nationalized. Social fabric destroyed. But Britain's collapse will be worse because Britain has unique vulnerabilities. An island nation dependent on imports. A service economy with no industrial base. A population trained for jobs that won't exist. A currency that only has value because of property wealth. When Japan collapsed, they had industrial exports. When Ireland collapsed, they had EU support. When Spain collapsed, they had tourism. Britain has nothing except property wealth. When that goes, everything goes. The British property market isn't a market. It's a Ponzi scheme. And like all Ponzi schemes, it only works while new money keeps entering. For 40 years, that new money came from easier credit, lower rates, longer mortgages, higher multiples, government schemes, foreign investment, immigration. Each source pushed prices higher, creating paper wealth that felt real. But we've hit the mathematical limit. Rates can't go lower. They're already rising. Mortgages can't get longer. They're already intergenerational. Multiples can't go higher. Banks are already at breaking point. Government schemes are exhausted. Foreign money is leaving. Immigration is reversing. The Ponzi scheme has run out of new money. And when Ponzi schemes run out of new money, they don't decline. They collapse. Instantly. Completely. Irrecoverably. In 18 months, Britain will be unrecognizable. Half of current homeowners will be in negative equity or foreclosure. The middle class will effectively cease to exist. Foreign corporations will own entire cities. The government will implement emergency measures that become permanent control. Society will stratify into property-owning elite and everyone else. This isn't fear-mongering. This is mathematical inevitability based on current data. The triggers are already pulled. The timeline is already in motion. The collapse is already beginning. The only question is whether you'll be prepared or destroyed. Britain's housing market isn't approaching a crisis. The crisis is here. The bomb isn't ticking, it's detonating, right now, while you're reading this, while politicians pretend everything's fine, while banks extract their final profits, while foreign funds prepare their shopping lists. 2 years from now, those who sold will be relieved. Those who bought will be ruined. Those who rented will be homeless. Those who waited will have missed everything. The British dream of property ownership is about to become the British nightmare of generational debt slavery. And unlike previous generations who could work their way out, this generation will discover something terrifying. When property ownership concentrates in the hands of international corporations, when governments depend on those corporations for tax revenue, when society restructures around corporate landlordism, there is no way out. Ever. The time bomb isn't going to explode. It's exploding. The question isn't whether you'll be affected. You will. The question is whether you'll be a victim or a survivor. And that decision needs to be made not next year, not next month, but right now. Because by the time everyone else realizes what's happening, by the time the media finally reports it, by the time politicians finally acknowledge it, it will be over. The wealth transfer will be complete. The new order will be established, and your chance to protect yourself will be gone forever. The clock has stopped ticking. The explosion has begun.